Hey guys, how are you? Crypto Sniper here, and we are looking at the markets away and still away, been off grid for a bit, and took a while to get back up again actually on the laptop, and was battling to get some vids out. Anyway, a gold vid did go out on the marketsniper.com, so check that out on YouTube. Gold, silver, and the gold silver ratio. It is an interesting time, even if you're crypto focused, to watch something like gold, because there has been some degree of correlation, and they are both deemed flight assets from the great Fed shell game of interest rate U-turn and proliferation again. Anyway, this is Ethereum, Bitcoin. I'm going to start with a different chart. Normally we start with Bitcoin. We will get to Bitcoin, but here's my take on this. So I tweeted some time ago that we're going to probably see 1768, as in 1.7%, 1.76% of a Bitcoin. And there we go, we just send that out. It was the tweet when we left the 2.5 level. I said we were going to probably leave the 2.5 level. You can only say probably on balance of probabilities. And that would be quite a while before we see it again. And this is that 2.5 level. That's 2.5%. Basically, Ethereum, the alt, valued at 2.5% of a Bitcoin, 0.025. And we actually said, look, we're looking for 17,637. So still some way to go. But there's been some nasty plunges. Most of this has been continuation since it let go. We had good structure. We all know that we are volatility orientated. By the way, if you want to find out more about how we trade and why we trade the way we do, etc., pop over to the marketsniper.com, book in a chat with a 2.5-year HVF trader experienced, and find out about his journey and see if it'll suit you, and also talk to us about what you do. Anyway, enough of that. That was the squeezing along the 2.5, each time just running, and then that little spike there, and then down she goes. Flag-like behavior here, or bad wedge, kind of a bit of both. Let me take the magnet off here. And you had a little bit of that and a little bit of that. That's downside continuation, even though when you're in it, it doesn't feel that great. It's a bit of a spike, but then boom, just after that, skid, and then dribble down. And I think that low will run, and I do believe on balance of probs we'll run the 17.6 level. So that's quite a big loss. People don't realize you're going from 2.5% anyway, to 1.7%. You're on average, you're looking at another eight segments out of 17 that you're giving up. It's almost then half of what Ethereum will be worth, what you're about to lose if you go from 2.5 to 17. So it's a big loss, and this has been the Bitcoin dominance theme as well. So we've been on Bitcoin dominance. We had a target right through up to 65%. That doesn't mean it's the end, but we had a pullback after that. So why don't we skip over to the Bitcoin dominance chart and just re-talk about this. So whatever's happening, rain or shine, you don't want to be in alts at the moment, and people have not accepted that. The more it's continued, the more they are determined that it's just about to happen, and that alts are going to probably totally pump and take them back into the game and make up, and they've held on for so long, they're going to carry on holding on. In other words, they're bottom callers, and they're going to keep hanging on to a theme that is not working for them at the moment. That's not to say it will never, but there's some structure again that we drew after we made these 65%. We called again then for 68.49. We made that target, and we're still dribbling through. So in all essence, you will eventually get some degree of respite for alts, but this could be a long way off. Let me take that line off, and let me put the eye on here, and I'll draw it with the pen. So what you're essentially getting is a very low vol rising wedge type structure. Now, stop drawing lines. Let's do that. Go away. Eyeball. Let's go. Pick that. Okay. So so if we have a look at the BTC, oh man, it's driving me bonkers. Sorry, my trading view performance. It's been a while off the. Get rid of that line. Go away. Go away. Go away. Let's get the pen up. Okay, so what are we getting? is what we're talking about, and you're kind of getting a structure here that has a level like that and a little bit of a level like that. So at some point, you know, you may get a sudden underperformance of Bitcoin, and the alts have just given up so much that they only lose a few percent, and Bitcoin drops 5-10%, and you may get a stab down like that. But remember, this can bleed on for a lot longer than I've indicated just from here. I like to split our wedges. We've done some great slide content on the huge amount of information and playbook that wedges will give you. I do that only in the premium side because it's a volatility constriction, and we are the specialists on volatility patterns. And I watch for these, and I've seen them, and I've seen how they play out, and we actually have, you know, eventually you realize there's only certain number of ways that something resolves. Anyway, Bitcoin dominance is in that kind of structure. So higher highs, quite a bit of compression along the lows here. So that means there's more dip buying on Bitcoin than there is in the alt. So that's what leads to this continued supporting pressure until it can't anymore and exhausts and has a bit of a relapse. And that's probably when the alts. Now, many of you may not remember, but when I was interviewed by Omar Bum on his channel at Crypto in Acapulco, the key point that made me feel that the one thing that we haven't had yet, yes, we've got a bull run with Bitcoin. It's been mainly a Bitcoin bull run, which has pulled up. The Litecoins had a very good year as well, but it had pulled up kind of the alts mainly by it. You know, kind of the alts it hasn't been an alts-led one, although you might argue Litecoin was early and strong for quite a while, and one or two others. Binance Coin has been a relative outperformer, but generally the market cap has been that's not the chart. I was looking at coin market cap. Maybe we'll get that out, but generally it's not, you know, all the others are broadly underperforming, including the likes of Ripple, Ethereum, all the big caps. And as a result, one thing that hasn't yet happened as part of the bear market is all the coins that really don't have a reason for existing. Who's mining all these coins from, you know, 1,000 downwards, even from 400 downwards, that are old, stale, and dropping, and they're just Me Too tokens. There aren't any especially quicker, there aren't any especially more secure, they're not doing something particularly unique. It's going to be more about the foundational platform. Maybe there needs to be quite a bit of clearing out, because there must be some cost for these coins to be upheld. In some senses, you know, somebody's got to maintain their listings on the exchanges, etc. The exchanges will want some money if they're not trading sufficiently, etc., etc. They're not getting a bit of interest. If the scale of interest is diminishing, how do the holders keep hype? And a lot of people trying to create PR in an environment which they start to get drowned out. Anyway, enough of that speculation. We haven't had, for me though, the complete fire burn right the way through those that don't have a justification for existence. And maybe this pullback that I'm expecting that will come on Bitcoin, I'll discuss now, could lead to some of the alts that have lagged being pushed back down again, and might break the spine of a few of the weaklings. Okay, so that's dominance, and we highlighted Ethereum. I didn't talk about Ripple against Bitcoin, so why don't we? This is one that we put out a really long time ago. I have mentioned it enough times, so I won't spend too long on it. But again, the convexity here, this doming out, it's just Ripple just hasn't come to the party, but everyone's sitting there waiting for a super spike. We looked at this and said, would you possibly be the point where you get up because there was a previous support? It dribbled through that, and then we reverted bear again. When this squeeze couldn't resolve itself to the upside, down, we expect new lows. That low was run, that low is run. You're now looking at some low that occurred in 2017 that could be under pressure. And this is just these guys selling their massive overhang. That's where fundamental information is useful, you know, the pre-mine and the overhang, and suddenly, you know, people aren't holding things where other people have just given themselves or ordered themselves a massive percentage of it. And I wonder if this isn't going to happen, even though supposedly they're getting all these partnerships where they're throwing more money. Anyway, so technically, again, this still looks really, really poor relative to Bitcoin until it does something like that. And that could be an orchestrated super spike, but they weren't able to make much happen here. So you've got to ask, has some of that willingness to burn cash to generate super spikes that then fizzle, for them to sell out on the top of the jolts that they do, feels a bit like an orchestrated market to me. Let's get on to the big boss, that is Bitcoin. Let's close that. In fact, the delay has helped because it was also in a little bit of a nowhere land environment, Bitcoin. And there has been some subsequent price movement, which allows us to potentially have a slightly higher level of conviction about what comes next. So this is your daily, which captures the bear market from the 20,000. Most of you know that. You'll also know about this very volume by price intense area where you spent the better part of 6 to 8 months just churning and squeezing before capitulating and basing out. Then we had our first setup in a new trend there that led to the beginning of the Bitcoin bull, which dragged some of the alts up. As I say, a few notable exceptions aside, like Litecoin, that was a bit earlier. But what about where we are now? Well, we did run the 61.8 just of this entire retracement. So if you call that 100% and the low around 3.2s at 0%, he says, doing a childlike scribble. It's a bit slow here on the internet, so it draws a bit weird. You did cross the 61.8%, which is a classic point. Now, my suggestion is that it's quite possible that we've had quite a decent run in gold and all of these, that the control structure will orchestrate a pump. The equities are going to be strong. Everyone's going to get used to the new normal of the Fed's potential pending cuts in this globally weak economy that never really escaped the depression that was always in. We've always maintained there was a depression, and as a result, you're going to get used to this new normal of interest rates, and there might be a bit of a sell-off on the risk assets. People say, well, this is just how we roll now. So let's have a look at this price action over here. So this broadly feels volatile and potentially toppy. Now, normally we could say to you, yes, there's potential for upside continuation after this move, but my bias here is that this is quite weak, and that this sell-off from the 13.7s, 13.9s, was it 13.9s? That's a bit high, 13.7s down to here. Let's get the pen back up. Was reasonably firm, so it was a nice little boom, take a slap in the face there, and that since then this is quite a convex rolling out. Some people might have tried to do head and shoulders. You shouldn't really. It should be at a relative high, not not when you've got a high watermark there. So not really count, but it does indicate that this was a key level of some interest. So I would remove the shoulders, certainly in the head here, but there's certainly a level through this pattern that's quite interesting, and it also ran through earlier as well. But all that aside, this is not looking particularly perky. My suspicion of what comes next is the following. We will set up some form of structure maybe for a little downside, unless news comes to the rescue and the Fed and the weakness and the interest rate cuts and the QE all come out. It could then put some heat back into this. So let's talk about what I suspect might happen. And remember, we're trying to be predictive about the future. It's a probability game, and there's still quite a bit that can happen here. So there's a number of options. So it's early doors for calling this, but my bias actually is that there would probably be in some way a weak rally that will continue for a bit, and that we might bump into what was an interesting level here, battle with it, not really easily get, and then be quite firmly down again. This sell-off was even more brutal in some ways than that sell-off, and this up leg was took quite a while to materialize up. Then you needed to wind up there, and then you broke up again. So your gradient of ascent is actually flatter than your gradient of descent. That shows the bid disappears suddenly, and people are panic selling out. So there's more people looking down with fear in their hearts than maybe there's new, fresh greed money. This points to a flat turn like this and a possibility of another a flag-like price behavior or another little impulse, and potentially you squeeze to break down. So my overall bias would be that there's probably a sell-off to come. I don't know what news is going to come for that, because the economy is terrible and the risk on assets like gold and Bitcoin should be doing well, but who knows? They're putting the heat on Libra, they're putting the heat on, which is, you know, supposedly was a driver of the upside. I don't know about that. That's narrative. But it does look weak. It does look weak. And the alts look weaker still and have already broken and run. If you look at Ethereum, they've taken out that low over here and have broken lower. So I think Bitcoin to follow the alts on that down leg. It's held on a little longer because there's been more dip buying. It's a bigger coin. There's new money will enter through the Bitcoin gateway, but on balance, that would be the thing. How do I be wrong about this? How do I be wrong? There's a new enthusiasm. The Fed says really dumb stuff. We get a stronger than expected impulse with just a moderate gradual coming off, and we set up a nice continuation for upside. So you'd want to see lots of impulsive upside activity getting nice and high relative to that high, and a continuation pattern maybe like that. That would be an example. In other words, I'd be directionally wrong, but I expect the volatility to die in both ways, because this has been quite a volatile period in a snapback. So overall, that high, that low, you know, talking from 13 to 9.8. That's over 13.5 to 9.8. You're talking, you know, going on $3,700 swings, and this wasn't too much less. You've gone almost as low, and you were pretty high there as well. So a greater calming of the daily range, but a move in one direction. If this impulse seems flat, low, I'm biasing bear. If it was impulsive and moved its way up and got quite high up here and then just drifted off casually, you could look to the upside, but I'm 55% on this. Already this up move came into shooting star, a little bit of pause and back down. So already it's taking me down the direction of a moderate move up, which could then suddenly have again a bit of fear and absent selling. So investment wise, I'll go into fiat on any move up here, almost 100%, and I'd actually look to trade short to medium term short if this case develops further. That's it from me on the cryptos. I hope you enjoyed it. It takes a while to finalize over here at the moment and to upload, so I'm going to not make this too long. Catch you later and see you on the other side. And this is not advice, it's entertainment. Book in for a chat if you want to be part of our Sniper Circle community, where we are discussing and updating, looming, and doing all the fancy things on our cryptos, and a lot of discussion on gold and equities and all the different trades where you can trade if you want to become a lifestyle trader. It's not for everybody. Okay, thanks for watching. Speak to you later. All the best, guys. Bye.